Welcome everybody. Thank you for coming today, especially on a rainy day. I know it's not easy, and I'm glad everyone got here safely, and we wish you a safe drive home. So, welcome to Simple Mortgage, our monthly training. You know, our goal here is to basically gap the knowledge between realtors and lenders. We feel that there's things that we should know and you should know that help us work more efficiently together. This is a very unique environment for us because we have a live webinar and we have a in-person live audience. So the people in the on the webinar, feel free to ask questions on the chat screen. Of course, everyone here live today could ask questions, just raise your hand. Let's make this a very educational, no questions, a dumb question type environment. We're here to learn. There's some handouts there. Webinar folks, look at your handouts. Drop down list, and everyone here has a handout passed out to you guys. Do me a favor, please mute your phones and beepers. I don't know if anyone has a beeper.
Morning. A pager.
Hey, how you doing?
And a payphone.
So silence your phone, excuse me. And with that, we're going to start our training. I want to introduce someone very special, someone that's been with us for a long while, a 15-year loan officer. She's going to be my co-host, Sheila Newfably. So welcome her.
Hi, everyone. Hello. Okay, so I guess we're starting now. Did you verify if they can hear us?
Mhm.
Are they able to hear us?
Pass them all out, or? Okay.
Yeah.
Can I have one?
We're passing out the handouts. So thank you, Omar, for the introduction, and thank you, RH, for having us here. And thank you to the people that made it here physically, despite of the storm that we're having outside. He's making fun because I told him it's so, every time it rains in California, it's so dramatic. Like it's always like a big deal to get out of your car and drive. But also thank you to the people that we have on the webinar now. So as we go through this training, we want to remind everybody that this training is not specific to anyone's skill set. So you might be a newbie or you might be a veteran like Juan. Like I said, this is just the very, very basic that we're going to cover for today. Okay, so we want to give you, we want to let you know why we're having these trainings, these monthly trainings, by the way. So the monthly trainings we're actually providing, we're giving you tools so you can have the confidence when you meet with your buyer, and you can have the tools to have a more efficient communication. And also for today's meeting specifically, we want you to capture and go after the right buyers. So that's what today's meeting is all about. Clickety click. So again, identifying qualified buyers is the topic for today. And what is a qualified buyer, right? So in our industry, right, a buyer must be ready, willing, and able, right? So anybody can say they're ready and they're willing, but who's really able to, I mean, who's to say that they're able, right? So thumb on the, yes, who's able, right? So in order to purchase a home, you either have to have all the cash to buy it straight out, or you have to have financing, right? And you need to be able to identify your buyer's ability to finance, right? And we're going to cover some of the pointers today. But just a quick reminder that there's two very important terminology in our industry today, right? They're pre-qualified versus a pre-approved. So in our industry, between realtors, the talk between realtors and loan officers, we often hear the word pre-qualified, right? Pre-qualified merely means that a loan officer has a verbal conversation with the buyer. They gave them their information verbally, and based on the information that we gathered through the phone or email or what have you, we've pre-qualified them. We said, you know what, you're good to go, you're qualified. However, a pre-approval is what you really want. A pre-approval means that we've pulled the credit right? Because with the initial conversation, they can say, you know what, I really have sucky credit. And you would say, well, how do you know? Or I would say, how do you know? They're like, I have Credit Karma. I get credit reporting from my credit card. And based on that information, I have a 600 FICO, or reverse, I have 800 FICO, right? All good, but we need to document that. So in order for us to issue a pre-approval, we must pull credit. And pre-approval is really what you actually need, right? So you're solid, you're good. So agents, when you have listings, you need to make sure that you have a pre-approval. Hard pre-approval just states their FICO score and a signed letter from your loan officer stating that I reviewed all documentation, blah, 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 and this guy is solid pre-approved for this amount with a down payment. So that's what the difference is. Any question? Good. Oh, of course. Yes, Robert.
In some of the pre-qual letters, I asked the lender, hey, what's their mid-FICO? I can give that information out. I said, look, I'm not asking for the social security number, I just want the mid-FICO.
Yeah.
I mean, is it reality they can
Yeah.
share the mid-FICO?
They have to, yeah, of course, yeah. So make sure in your listings, in order to accept offers, you need to make sure that they have the FICO and all documentations have been reviewed, and that is going to be based on the pre-approval. So now,
Let me just be clear though, they still have to have their buyer's permission, because the buyer says, I don't want this information shared, the lender has to comply. It's only with the person, whoever belongs to's permission.
Got it.
So they don't have to per se, but if they want to buy the property, if they want the listing agent to consider them, they should
Yeah.
divulge whatever they need to make them look
Got it.
like a good buy, solid buyer.
Yeah.
Thank you.
so one of the tools that we've provided for you guys is the buyer's pre-qualification application, buyer's questionnaire. It's actually one of the handouts. So this is basically just a script, or just questions that you might want to build in your conversation. So remember, when you're having your initial meeting with your client, you want to be able to drive the conversation. I mean, you want to be able to sound smart, right? So you need to ask the right questions when financing. Sound smart, yeah. When financing subject comes up, right? So when he starts asking about financing, then you can just rebuttal with these questions like, well, how many years have you been in your job? You need to just build it in your conversation and make it sound as natural as possible, so you're not turning them off and scaring them with these questions. Or you can also just pull out, get a vibe of how your buyer is. If they're comfortable with filling out this form, great. But if you just want to have a casual conversation, try to build this in and try to memorize it and think of it like a script, right? We all have our sales script as agents. And so these are some of the important questions. Like, for instance, are you a legal resident? Do you have valid social security? Those are things that you need to know, because if they're not, then it's very unlikely that they will qualify. But we do have programs for other specific niches that we have that we'll cover in another meeting. But these are some of the important information that you need. And right at the bottom of that, right, is right and clicky.
It's not a handout, yeah.
Yeah, it's not a handout, but it's right here. These are the documents that we usually need, right, in order to assess their income. So, agents work differently. Some agents might want to just say, Sheila, take care of everything. I've had a conversation. They're still ready and willing. Now you figure out if they're able. But some agents, they want to be efficient. They want to get involved because they want to learn. So they go as far as collecting documentation. And this is also a good way to, to learn and see what we're looking for. So documents that we require, we need a copy of the driver's license and the social security card, because those are required documents that you need to submit to the lender. We need the 2 years personal tax returns, and if they own a business, we also need their business tax returns and their firstborn child. No, we don't. I'm just kidding. That's my joke. And then we need the 2 most recent pay stubs, right? And 2 months bank statements just to verify their down payment or wherever their down payment's coming from. And don't forget to mention that, hey, buyer, I'm collecting these for my loan officer, but there might be additional documentation that they may require soon after they've reviewed your file, just so they don't use that against you and be like, hey, I gave you everything and you said, go ahead, Omar.
Such like maybe a divorce decree, or if they're receiving child support or paying alimony, there's additional things.
Yeah.
And we're not expecting you guys to know every aspect of it, but you guys should be at a point where it should draw a red flag. There might be something else, so it's really good to prep the borrower or the seller who's gonna buy another house. There's gonna be additional stuff, and this is the possibilities in case they ask you.
Yeah.
Because you're gonna be their point of contact initially, so it's important you kind of know what you're saying. So.
Yeah. So this is just a basic, or that was a basic that we asked for documentation. So after gathering the documentation, right, you want to be able to assess the income just with that. Again, not everybody fits in the same mold, right? And there's 2 different types of income, traditional and non-traditional. Most importantly, all income must be documented and tax reported, right? Cash income is unfortunately not acceptable. So some of the traditional income that we're used to seeing is just the regular base pay, salary income, salary hourly, bonus overtime, commission, and so on and so forth. And then here's just some examples of the not so traditional income, alimony, automobile expense. These are the ones that we can use to qualify. These are just some of them. If you really want the full list of it, I can email it to you. But remember, when you're asking your clients for income, you have to mention, well, any income, Social Security, anything. It's not just jobs, like money that you get from taking care of your parents. Anything that's documented and tax reported, we can use that, okay? All right, so you're having a good time. They provided you their documentation, and you start with a pay stub. This is, everybody knows how a pay stub looks like. We just want to point out that you need to be careful with a pay period. For instance, I had a client that said, oh, I get paid so and so on monthly, and then sure enough, I looked at the pay stub and I didn't realize, or bi-monthly, and I didn't realize that the pay stub they gave me was weekly, and then I used that to qualify. So, and then I called them and said, you don't really qualify, but because I gave them too much money, because I used weekly. So make sure you're aware of the pay period, and make sure that in order to be considered, just kidding, I can't touch this. In order to be considered full-time, they need to be working 40 hours a week, right? 40 hours a week, and part-time income is acceptable. They have to have 2 years history of it. It needs to be consistent. And let's say you have a full-time job and you also Uber, right? That's a part-time job. You need to make sure you have a 2-year full history of it, okay? And it has to be consistent. Same goes for commission, bonus, overtime has to be 2 years, right?
Question. So
That's true.
I've also experienced where someone says, I'm full-time, and they are full-time.
Yeah.
For the employer considers them full-time, they get benefits, but they're hourly full-time. So, let's say they clock in, on a time card. If they're late, guess what? It's not going to show 40 hours. It's going to show 39.5 or something like that.
Oh, yeah.
The underwriter will always look at that and say, okay, I'm going to average it out now.
Yeah.
Over the last, year. They're not going to say just give you 40 hours times whatever your hourly rate is. So there's some things to look at that we do as lenders, that can draw a red flag.
Yeah. Yeah, it doesn't necessarily mean it's a straight out no. As long as we have an explanation for it, that we can provide the lender that makes sense, then that's good to go as well.
So anything less than 40 hours is part-time?
Not part-time, it's just that they're gonna look at it, they're not gonna just say,
Differently.
40 hours a week times 52 weeks, and here's your income times whatever the hourly rate is. They're gonna look at, your year to date and see, okay, is it declining? Is it increasing? They're gonna ask an explanation why, or,
Is there a reason
they
for
might
the
be lower income.
shortage? Yeah,
Yeah.
if there's like a reason, a valid reason for the shortage.
Right, and that's usually what happens sometimes, so.
Yeah.
Got it.
So another documentation that we have collected at this point would be a W-2. And everyone is always curious as to what number we use because there's just so many numbers going on over there. And we use box number 5. That's the gross income, clickety-click, minus the Medicare wages and tips. There it is, the flying arrow.
Right, there.
So that's the number that we use, right?
Question.
So yeah, go ahead.
So, I don't know if anyone wants to know why the other boxes could have a different amount. So if you make too much money, let's say a certain amount above whatever the Social Security limit is or the Medicare limit is, they're gonna put the max limit in box, let's say, what is that box number? I can't see.
5.
5, not 5, excuse me, number 3.
Yeah, yeah.
Social Security, so it might be less, or Medicare might be less. So that's why she's trying to point out to you, make sure you're looking at the right box, which is number 5.
Number 5.
Yeah.
Yeah.
Confusing.
Okay, so now that we have the documentation with the income information, this is how we calculate the income. Again, the basic of the hourly rate times the per week, because our borrower in this particular example gets paid weekly. So just multiply that by the number of weeks in a year equals the annual income divided by 12 is the monthly income. Pretty easy, right? But again, for overtime, commission, and bonus, it has to be an average of 2 years. And again, for the W-2 income, you can also calculate the 2 most recent years and just easily divide that by 24 months. So now, if let's say they change jobs in the middle of that, the 2 years history we were speaking about, and they see a decline in income, they have to use the lower of the 2 years. Very good, yeah. Or the hourly, whichever one, because that's the current one, right? So, but on a positive note, if they got an increase somewhere in the middle of that, or if they got a raise, you don't have to average it. You can just basically use the current. Okay. Everyone clear? It's kind of pretty simple, right?
Questions? Yeah, feel free to ask questions.
So again, we don't expect you to know this because this is actually our job and the lender's job, but this is just for your information. Okay. So for self-employed and other income, I don't know if you guys have filed your 2018. How many of you guys have filed your taxes for 2018? Wow. You have, right? Have you seen your 1040s?
Everyone's ready to
Are you
pay taxes.
Schedule C?
I know. Everyone's so excited for the government. Guys.
So the new 1040s has, oh, that's one of the handouts too. The new 1040s looks like this now. There's a page 1, right? And a page 2. I don't know how many of you look at it or you just cash your check out and then go shopping. But this is how it looks. This is the new 2018. There's a page 1 and a page 2 versus the 2017. I think the 2017, this was just like one whole page, right? So now there's a schedule 1 for business income for your 1099. That was our 1099. There's now a schedule 1. So go ahead and click, and you will see the business income right there, and line number 12. And again, I don't expect you guys to know everything that goes behind the scenes with this, but just quickly look at that number, and if they're Schedule C, right? And then divide that by 12 or by 24 years, depending on if it's months.
24 months.
Yeah, 24 months, 24 years. Yeah, 24 months, depending if it's declining or increasing, right? But they have to have a history of 24 months. So again, this is like really basic for everyone to know. We'll go into a more detailed training if you really want to know how to calculate rental income, royalties, capital gains, and all that other interesting stuff. But another, okay, so that's a calculation. There's my teacher. Okay, so that's a calculation. All right. And then another tax form that you should just be aware about or get familiar with is the K-1 tax form, which is also a handout. And go ahead, Omar. Do you want to say something about it?
Yeah, so self-employed, the golden rule. They want to see a 2-year history. Okay, they want to see 2 filed tax returns. So from the state, when you hear self-employed for a particular buyer that walks into your open house, they say they're self-employed, ask them how many years they've been self-employed. They say, oh, 3 years, okay, great. We have, make sure they file their tax return to show this, okay? Because I notice a lot of self-employed people, they say, I make 150,000 or whatever it is, but they don't tell you what they're paying taxes on. I mean, so it's really important for you guys to acknowledge, like, make what you make gross is great. What you pay taxes on is what the bank or the underwriter considers as income. So just keep that in mind, you know. And I know Sheila keeps bringing you back to the idea, like, we don't expect you guys to know this, but I want to connect lenders and realtors here in the idea that us lenders, we need to know a little bit about contracts, right? Appraisal contingencies, loan contingencies, inspection contingencies. So if you want to be that proactive type realtor that you want to dive in a little bit into income, that's the reason why we wanted to do this for you guys, to say, hey, if you guys want to learn, we'll teach you. You know, none of this, we don't want to necessarily do our job because it's a lot more complex than this, but it doesn't hurt because it makes you more of a rounded professional as a realtor, you know, which we'll get into further on. I want to ruin Sheila's surprise, but back to self-employed. So that's the golden rule. Another golden rule when it comes to any income, but I'm not going to talk about self-employment, is if it's declining. If 2017 you made 100 grand, you pay tax on 100 grand, and then in 2018 you show 60 grand, they're not going to average out over 2 years. They're going to average out over the most conservative approach, which is the last 12 months. So keep that in mind too. I think it's really, really important. Now, on the screen you should see in the handout on the screen you should see
The K1.
1120S. That's actually a K1, but on one of the handouts is 1120S and 1120C. And there's a K1. So when you hear K1, think of the K1 something like a W-2 in a way, but if you're incorporated, you own a corporation, like an LLC, or you're an S Corp or a C Corp, that just means that you're incorporated. On an S Corp, the difference is that the company itself doesn't pay taxes. So for instance, I own a corporation. Whatever the company makes as a profit or loss goes down to my personal tax return. So, and you'll see it on the personal tax return, which on some of those handouts regarding the new 2018 return, you're going to see a line item for business income, you know, and that's going to be included in there. But back to this K1. So K1 is for an S corp that doesn't pay taxes. It trickles down or it gets passed on to the bar or to you guys when you file taxes. So just keep that in mind. So it's going to be taxed along with any W-2 income if you have as well. You can have both. You can have a self-employed person who owns a company, W-2s himself. So the W-2 income, you're paying taxes to the government already, right? And then whatever is left over as a profit, let's say on this S corporation, then funnels down as a K1, which you'll see line item number box 1. Or I just put, I think on there it doesn't say, but on the handout it says income, box 1. There's also other income, like box 2 is rental income for the company. So I just wanted to point out that's where you find the income. So if you've never seen this form before, you just take a look at it. You're now familiar with it in case your borrower asks you, you know, kind of an idea what it is. I also want to point out section F or box F. That talks about the percentage. You know, because if your borrower is only a 10% owner, he's only going to show, you know, 10% of the profit or loss. So those are two things I wanted to cover. I don't want to get into too much detail of it. So I just talked about 1120S. It's an S corporation that might refer to as. Those taxes are not paid by the corporation, they're paid by you on your personal tax return. 1120C, that's a C corporation, and that is its own entity in a way that it pays its own taxes. So if your borrower has 1120C, that corporation is going to pay its own taxes, and whatever that net is on 1120C, I have line item 27. So line item 27 is going to show whatever it is. And depending on ownership, you know, that's going to be, you're not going to see it on your personal tax return, you know? So it can get really tricky. And again, I want to confuse you guys. If you guys have additional questions, we're more than happy to meet with you guys on a one-on-one. Again, I just wanted to introduce it to you guys. So you guys have heard it, you kind of have an idea. And of course, we're always open to asking more questions. And that's pretty much it. I'm going to hand it back to Sheila.
Okay. So, that was my surprise. So, I was so excited when I made the PowerPoint. So, what is the buyer's most, that's basically most of the income, right? What's the buyer's most common question? Go ahead, Juan.
What's the interest rate?
Yeah, that's a good one too. That's one of the most common ones. The one we're looking for today. Okay, but yeah, and I don't know what the answer is. That's another whole hoopla of training. Hector, did you want to try to get a guess?
Sure,
What?
how much can I afford, or how much can I get a loan for?
Okay,
That's a good question.
that's a good question. That's gonna tie into the answer.
How much does this house cost?
Right.
Yes.
What's the monthly payment like?
Wait, what?
Yeah, yes.
What? Next slide, please. What will my monthly mortgage payment be? And he got it right. I mean, he got it. So that's him. Okay, so that's him. That was our surprise. And from you have to keep this on the remaining of the meeting.
Oh, yeah.
Can we? All right, good.
My name's Bob.
So what will my mortgage payment be? And when your clients ask you that, what do you usually do? Like honestly, what do you say?
I ask them how much would they like it to be.
Very good. That's good. Like, yes, Ahmed, what do you tell them?
5.5 to use that.
Yeah, good one. But, yeah. And what, Eva, what do you usually?
Well, I have my information from my lender, so. I'm doing the
Exactly.
rest.
So usually you call your lender, right? Like, yeah.
That's nice.
So you're like, yeah.
Yeah.
Yeah, call the lender and you're like, hold on, in the middle of dinner, and I'm like, okay. So typically you call your loan officer, right? So what will the mortgage payment be if this person buys this? And then the loan officer always wants to be available and answers a question, right? But we actually have an app that we recommend.
What's
So
our
it's,
app per se?
yeah, it's my app, all right? I bought it. So we have an app that we use, but it's not ours. So it's the Zillow, Mortgage by Zillow. You can pull, we have time, so you can pull your phones out. And you just do it now. It's free. You just plug in REH as a code. I'm kidding, no, it's not. It's really free. So it's free and, can you go on the, oh my God. Minimize. Minimize. So you saw it, right? Go to your apps. Nope, minimize.
Sorry.
It's all right. I hope my pictures don't show up. Oh my God, I will die right
So there's a lot of apps
now.
obviously you can use.
I
you
have,
know,
just click
but
on
is a
this,
good one for
click on the screen.
demonstration, So.
Yeah, we have time. So this is how my phone looks like. Hope nobody texts me. Okay, so once you've downloaded, it looks like this, Zillow Mortgage.
Check your messages.
No, I don't. I'm scared.
Wow, you got a lot of
I want
lows
to.
there for all those emails.
Right? Should we look at all these? Oh, I'm sorry.
My email in there?
Yeah, okay.
Mine is just go to the.
Okay, so do you guys, because we have like time.
Yeah.
You have it. That's so fast. Everybody has it? You've downloaded it? Okay, yeah. So anyways, so click on this. Wait, I'm clicking. That's not. Click on the icon, and it's pretty amazing. Everybody thinks that I'm a genius, right? Because they're like, Sheila, what's the mortgage payment on this? And I'm like, okay, how much is the house? And I give it to them. They're like, wow, it's so fast. How'd you do that? I'm like, I have the calculation right here. But anyway, so
Just a bond.
yeah, savant, not the first word. Not the first word.
Yeah.
Okay, so payment calculator, boom, and this shows up, and you want to put that the price is 300,000. You're right. Can't find that in LA. So let's put 1 million. No,
Irma.
750 sounds good. Whatever, my finger. Whatever, 780, and they're putting 20% down. Yeah. 20% down, and the interest rate, they're getting a deal at 4.25. And it basically tells you what the payment is, right? And you can work backwards when you ask your client, what payment are you looking for? And they say, oh, I'm looking for about total of $4,000, including tax and insurance, and bam. Okay, we'll get you in a 780 house with a 20% down. So that's kind of the range. So, I mean, you're still welcome to call your loan officer to get the idea and have that conversation. But this is like a really good app while you're having that meeting with your client. And you can also tell them to download it. So that way they don't have to ask you. They can just play with the numbers, right?
And again, our idea in showing you this is obviously the tools, but sometimes you're sitting in an open house, that those initial first 10 minutes are crucial. If they feel comfortable with you, you sound
Slideshow.
confident, intelligent, or
Make a
something,
big-
and like, even if the rate is off by a quarter, your
Slideshow.
payment doesn't move so much. It just gives them the ballpark. So instead of, someone wants the answer right now, they seem like they're eager, they're telling you everything, you ask the questionnaire,
perfect.
you kind of have this grid 20% down, I work full time, I make 100 grand a year, W-2, what's my payment on something like this? If you can give it to them like in 30 seconds. You just answer question after question
Yeah.
after question, and guess what? They're even more, there's a chance they're gonna like you more. They're gonna wanna hear from you more because that person sounds.
Because you're on
someone
top
I
of
wanna
it.
work with. So that's our mentality when we're showing this out.
Yeah.
Not
You're on top of
necessarily-
it.
yeah.
You're killing it.
Yeah.
You're ready, willing, and you're also able, not just the buyer. Right, Ahmed? What's up?
When you click on advanced, it's already set. If you click on advanced,
Yeah.
there
Uh-huh.
already set for some things. I mean, HOA, homeowner
Yep,
insurance,
exactly. You
taxes.
can play with that too.
It's a great app.
Yeah, but my question is this: in there it says default is 1.125 for tax.
Mm-hmm.
I usually put 1.5% for tax and insurance. Is it accurate or not?
What do you for tax and insurance?
Well, because it's usually 0.25 for insurance,
1.25.
1.25, so it adds up to be 1.5.
No, but
I
there's,
think 1.5 is kinda high.
No, he's saying it's both.
No.
1.5% for both tax and insurance?
no, but on this particular app, there's one for property taxes and homeowners insurance. So leave the property taxes at 1.5, right?
1.1.
And there's another
1.25.
1.25, and there's another default for homeowners insurance.
I mean, insurance is gonna depend on the property.
Yeah.
If it's a $1 million home versus a $300,000 home, usually it's anywhere from,
$1,000
$60
to,
to,
yeah.
$60 a month to $150 a month, depending where it is. So,
And county, yeah.
so
You wanna go back to
1.5%
this?
is not
Go back to
accurate
this.
For both?
I would know, you can't say it's accurate, no. But I mean, and I think it's a little bit on the high side.
It's like-
I think-
Yeah, roughly it is. Because they use the 0.35 calculation. I mean, that's roughly it is.
And we should include HOA too. If it's.
Yes, so that's all on here. So there's an HOA dues section, but do you want to go live again?
Yeah.
Just, yeah. Let's click on my. Yeah, I don't know.
I have a question.
Yeah.
So I actually went back to the app and it says market trends, right? It says 30-year fixed national. So if somebody asked me like, what is
Minimize.
National.
the national rate? So it's okay to quote them on this or?
Yeah, I mean, but again, you have to let them know where you're grabbing it from, because nothing is 100% accurate. Even if we provide an estimate, it's not 100% accurate because the market can change.
Mhm.
Rates can change every hour, depending on whatever the market conditions are. So if your loan officer is not available or you didn't have that conversation ahead of time, you can always go on the internet and say, hey, what's like the average FHA rate right now, or a conventional rate? It's going to give you an average, and you let them know, hey, this is kind of the average right now. It's not exact. That's what we tell our clients, it's just an estimate, and then you can plug it in.
So with the national, how do we know what's the difference between conventional and FHA?
Well, you should be looking up, conventional, rate
Oh,
today.
not- okay.
You do a conventional rate today, or FHA
Yeah.
rate today, or VA rate today. And you're gonna have a million options to pick from. Again, you're not giving them 100% accurate, you're just giving them an idea, hey, this is what this is for this house.
Okay.
And again, I wanna hit home on something on this, that everyone, like for listings, everyone's so focused on, presenting the property, the details of the property, bathroom, bedroom, so on and so forth. But another part of the description of the house is how much is the payment gonna be? Isn't that part of this particular property? So you guys should start thinking of having something that shows financing options on every one of your listings. Your lender should always provide that for you, you should ask them, right?
Yeah. So this is what Hamed was speaking about, right? So when you go to advanced, it shows the property taxes, right? Oh, I have it at 2.25. So it should be at 1.25. It's kind of, my phone's so sensitive.
There's insurance
I
right
believe
there.
you can tap on it. and
There's
it'll
insurance.
too. If you tap on it, you can actually manually type it.
Type it.
Oh, okay.
Oh, yeah.
Let's try. Boom. Yep. Genius. So yeah, you can also just, I like that. 101.
And there's a homeowner's insurance too, so.
Yeah, so you can plug in your own homeowner's insurance.
But that's $1.
And then the HOA dues, right?
That's why.
All right,
And you guys taught me that HOA is a deal breaker sometimes to get.
Yeah.
Right?
Right.
yes.
Yeah.
That was in our first training.
And
you were there.
So when they- because
Yes.
Yeah.
We are approved for 500.
Exactly. So
I
then,
have to ask it, with HOA or without HOA?
Right.
so now look at this. So 4,200 of payment is what they're looking at. But if you put an HOA amount, I put 275. Remember we were at 4,000 earlier, but I added this and now their payment just went up. But they're only approved for 4,000 a month of payment. So now what happens? You need to lower your sales price. Now you can only look for a house that's 730,000 with an HOA of 275, right?
And
So
it's
this
a
is a
good
good tool.
transition, right? It's a good transition that you kind of covered this already.
Yeah,
And say, hey, you know what, so for us to get accurate numbers, you know what?
you can go back to,
I think
yeah.
you should talk to my, my lender I've worked with
Yeah.
for the last 15 years, and he's great, or she's great. You'll be in good hands, I'll do a warm introduction. And then we break it down for them in more detail.
Yeah.
It's kind of just in addition to what you already presented.
Okay, so we've covered that app. Do you guys like it? It's pretty cool, right? Pretty handy. So now that we figured out the mortgage payment, no, first we've covered the income. Now we know what the income is, right? And we know what the mortgage payment is. We can now calculate DTI. How many of you guys know what DTI is? Victor, you don't know what DTI is? DTI is debt to income ratio. This is the main deal breaker. This is what
Underwriters.
underwriters use to qualify a client, right? It's their debt, their ability to repay the loan. This is what will determine if they are potentially officially able. Okay, so to calculate that, it's pretty simple. We provided you a handout. This is actually really cool too. It basically tells you what the total monthly debt is. That should cover the car, the child support, any responsibilities, financial responsibilities that they have that shows up on their credit report. And plus the monthly mortgage, the monthly amount that we just saw in the app. That's what the total monthly debt is. Okay. So that number divided by the income that you should already have also, the gross income, very good, is the total DTI. Now this number, the DTI, different DTI requirements for different types of loans. So depending on what loan you're putting this borrower in is the DTI varies basically. So FHA, it can go as high as 55. What's the highest you've seen? Juan?
55,
55, right?
yeah.
So
With
for,
compensating factors.
yes, exactly. And VA, what's the highest, same thing?
57.
57, well, yeah.
Wow.
So for conventional, 45, sometimes it's 43, just depending on what the situation is, but just for your own sake and sanity, just make sure that this number is under 50 when you're doing your calculation. Again, this is just for your information. You don't have to be experts. That's why I put him here. You don't have to be, it doesn't really take a genius to do all of this. We don't expect you to be an expert in this because that's our job. But we want to equip you with the knowledge just so you know what we go through, painfully go through. So this is actually that like really excite me. Like all that calculation was to have the income and then the debts, and I'm all like just like wired, and I'm like, yay, surprise. So now that we have all the information, right, we want to be able to do a warm handoff to our loan officer. You have to get to know who your loan officer is if you're referring that buyer to that person. You want to sound like you've known this person, right? You want to build that trust. So make sure you know their background. And when you're handing it off, clickety-click, you're basically handing off the baton, right? So you're like, here, You want to do an introduction, right? So it's either by phone call, you can say, hey, this is Omar, my loan officer. I've known him for 2 years. Oh no, actually like this, Olympic. Okay, there. Okay, so, hi, this is Omar. I've known him for 10 years. He's great. He's reliable. This is his background. He's on his company, blah, blah, blah. And then through email, I have sample emails of a more professional handoff. This is from one of our realtors saying hi, you know, kind of like introducing me, and this is my number. And make sure to, just as you're careful about their availability, make sure that you set expectations on your availability as well, right? Make sure you tell them I'm available from 8 to 2 and from 4 to 8, you know, because from 2 to 4, I'm picking up my son after school. So make sure, so they don't call you and then they go to voicemail and they feel like you've dropped the ball. So just set expectations on when you're going to be available. And you can put that on your voicemail too. Hi, you know, this is blah, blah, blah. I'm not available at this time, but I will return your call as soon as within the hour, what have you. So set expectations. This is another warm handoff email from Magali and one of her agents. Really great. So this is like a little, you know, little background about Magali and what she does. And so that's pretty much it. Any questions about the warm handoff? Or
It could be a text too.
it could be a text, like a group text. And this is, we're almost coming to an end, obviously, and this is our team. Omar is our broker, and Magali is the other loan officer. She's actually on vacation abroad. And that's me. And Maria is actually, she's in operations. She does everything on the
back
yeah,
end.
the processing on the back end. And she's really great. So, and she's very knowledgeable too. So most of the times, or some of the times, we ask her, because she's the one that actually sees the file, processes it, sends it to the lender, and all that good stuff.
And there's other people that are on our team, but these 4 are the group that actually help create the trainings. You know, we meet and, you know, so we're going to, any ideas in regards to what you want to see in future trainings, let us know. The next training is going to be on niche products, which I think is good for you guys to know, other than the basic stuff. But again, tools, connect, you know, learn what we do somewhat, so we, as well as less learning a little bit what you guys do, makes it a handoff and makes it a lot easier, you know, being more on the same team, I guess. And we went to like we're part of the same family, taking care of them.
So if you have any open houses, just pick up the phone and if you want us to host it with you, we'll provide flyers and we'll provide the financing information that Omar touched on our flyer, just so buyers know what they're getting into as well. And yeah, whenever you pick up even a listing presentation that you have an appointment, just call us and let us know what address, you know, where this property is, and we can run the address and see if there's any special financing that's going on. So you can put that in your pitch and say, hey, you know, this house qualifies for this. So part of my marketing will be to target these people, you know, for such and such. So we're pretty much available for listings, for your buyers, for open houses, and just basically for anything. Even if you have an ongoing escrow now and you feel like, you know, that there's something going on with a loan that particular loan officer is not really letting you in on, you can ask us and we'll tell you. So we're just here for support, and most importantly, your business. Yeah.
Any questions, guys?
Yeah, from a realtor point of view, we need some information on rent versus purchase, or so if you guys.
Yeah, we have flyers.
Yeah, rent versus purchase, because you know 30% of the people buying are tenants.
That's actually a good idea for door knocking.
Right.
You can door knock apartments, and you can just, you know, I can create a rent versus ownership with the payments and stuff. Like if you're paying $2,500 renting now, this is your affordability if you purchase a home.
Right.
Good idea when you're door knocking. So another thing too that that you can use as a tool when you're door knocking You don't want to just knock on the door and be like, hey, I'm here, I want to list your house. Like, if they say no, you want to be able to offer them other options so they don't feel like you're just there to take away their house. So you can say, okay, good, you don't want to sell your house right now, but in the meantime, how's your loan? What's your interest rate? So you can show concern in all aspects of it. Hey, I'm not just here to sell your house, but I want to be able to help you in this, other side of it. So just say, how's your loan going? We have these programs if you want to refinance, or if you want to upgrade your house, we have this product for financing. Just call our loan officer and she can run it by you if you want to do some upgrades. That way you're also helping us and you're also building your referral, right? That person could have referred you another someone. So they know that you're just not there for that purpose. You're actually there for their, for their benefit. Yeah, not just that.
Or cashing out, keeping the refinance, cashing
Yeah.
out, and buying a bigger property or investment property.
Exactly.
That would give you an immediate deal.
It's really important to have a good network too. Like let's say, you know what, I'm going through divorce, actually need a lawyer, and you're gonna be like, woo, lawyer right here. Psh. Actually, my son is looking for braces. I can't afford it right now. Boom, I have a dentist. So it sounds funny, but make sure that you're resourceful, because even if those people are not going to sell now, they know somebody that's going to buy or sell or what have you, and you want to be part of that conversation. You want to plant the seed, and every door that you knock to, you want to leave an impression. Whether it's your outfit or anything, your smile, you need to make sure they remember you, right? Just like you'll remember me. And Omar with his lapel.
Any other questions?
I have a question. When I'm representing the seller and I get offers from another agent, I usually get them pre-qualified with the loan officer that I've been working with for a long time. What is your turnaround time for something like that, or what do you guys do? Just give them your contact information.
Yeah, I think it's the same as the warm handoff. Like, you're going to put on your listings that you must be pre-qualified with this person. So as soon as you get that email of the offer, you need to reply and be like, sorry, you need to reach out to this lender before I can even look at your paperwork or with that package. Like, I don't know. The way for me, if I was listing a property, I don't even want to really look at their pre-approval until I have somebody that I can trust that's really looked at it. Because a pre-approval letter, anybody can write it, right? For the sake of just writing it. You want to make sure that your offers are solid so you don't fall out of escrow. See, what's the percentage of escrow falling out? Right? How many times, Robert, have you seen escrows falling out on your listings? Or
that's because of a loan problem, right?
Yeah, it's usually because of the loan, because they pre-approve them or they pre-qualified them with just a basic conversation. And so it's really good that you make sure.
You don't want to wait.
It never happens to us.
That's the way that I see it. We'll go into escrow or,
The lender, that's what it's saying.
Our
time,
you guys are gonna be like, I'm just gonna try to get the business.
Yeah, of course.
You know what I mean? Because
for sure, yeah.
It just depends, because it could be they have a good relationship and stuff. We're an ethical company. We're not trying to steal business per se. But if it's the borrower calling us, asking us, hey, what can you do, or what's your payment options, or so on and so forth, we're obviously we're gonna give it to them, but we're not here to try to steal business.
It's actually it's a fine line.
But you guys ask for the whole documentation.
We do.
Yeah.
So when it comes to qualifying, that's really our job. And if they're interested and they want to hear what we have to pitch, then sure. But we're not going to go there and be like, hey, they're giving you a higher rate.
But I can tell you how many times it's happened where we have cross-qualified.
Yeah.
And 2 months down the line, they come back because Chase dropped the ball or Bank of America dropped the ball. It's happened with Magali. It happens all the time.
We're not going to slander any big banks.
Oh, sorry.
Who knows what loan officers, but anyway, we try to do it in a time efficient situation, But again, loan officers have their files. You guys have your real estate files. It just, most of the time it's their lender contacting us. So I just make it really simple for them. Hey, give me this, and essentially I just check, make sure everything is accurate on their application. And that most of the time, which we didn't mention here, is your on your automated approval. And we make sure all the information jives, it
jives,
makes
yeah.
sense. And if it does, then we're good to
Sure,
go.
yeah.
You know, we don't need to speak to the borrower, we don't need to run our own credit, you know, we just make sure everything makes sense.
But 24 to 48 hours is pretty fair.
Pretty much,
Yeah.
Okay.
Usually the delay is because they don't get us everything,
Yeah,
you know, so.
but that's very
And
important.
that's usually the delay when borrowers want to buy a house, they don't get us everything right in the beginning, so.
That means they're not really ready.
Yeah, yeah, anyways, but any other questions? Well, thank you so much, guys, we really had a
Thank
great
you.
class, and we'll see you next month. Thank you.
Click it.